Okay, tell us please a bit more about your fund. The key metrics and check sizes, industries.
Sure. So we're a fund that called Oneway Ventures. I'm one of the 3 managing partners. It's me, Simeon Dukac, and Lex Zhao. Everybody has operating experience in the past. Simeon in the past was also famous for being the group leader of the MIT Blackjack team. And there's movies and documentaries and books written about that. But the fund is on a second fund right now, investing in early stage immigrant founders from any country in the world that want to build their next vision and next unicorn company in the United States. The whole idea that investing in immigrants is because of their grit, resilience, and we believe that all the people have the right to come here and build their future just like we did. And also, these people are giving up a lot. And you have people that are giving up your friends, family, their apartments and wherever they were, and they move to a more expensive area like here, and so they put everything on the line. So they're going to do everything in their power not to fail. And these are the type of people who want them back. We write checks up to $1.5 million. We lead about 70% of the time, and back people that want to build something big.
And you are seed stage focused?
Yeah.
And what about industries?
Late pre-seed or seed. Industry would be B2B SaaS, health tech, deep tech, or fintech. Those are like our primary.
What about B2C? What about hardware startups?
So hardware would be like robotics, aerospace would be probably things that we would be interested in. The consumer, since I'm out of a consumer, I know how hard it is. You might think that, we probably invest a lot of consumer. Actually, no. We only have a few companies in consumer space. And it's a very tough business. So we're not such a big fans of the consumer space. So we do make exceptions. But that's usually not the area where we invest.
I think you have a lot of founders outside of the Bay Area.
Yeah.
What do you think? Is it important to come to Bay Area, to spend some time here, or even to live here?
It's to some extent a loaded question, because I think that good example, I was talking to one founder who's in Canada. He's getting some traction. So all of his customers are in the United States. And being in Canada, I think he is sacrificing a lot of the growth staying in Canada. Regarding in the United States, I think if you're building a fintech, maybe New York is a better place. But I would say there's like pockets that are popular and that are very good. Is, I would say, San Francisco Bay Area #1, then goes New York, and I would probably just say Boston. Outside of that, I don't think it's worth you picking up your suitcases and moving if you're inside the United States.
And what about outside? Do you have founders live in Europe, Lisbon, or other countries?
So we have, for us, the founders need to be in the United States to invest.
This is the requirement.
This is a requirement.
And can he share his time, like 50-50? Can he split?
Mostly not.
Okay.
We want you to spend your time here. But co-founders sometimes are in Europe, usually it's technical guys. because a lot of our portfolio companies build their teams in Portugal, Poland, and other places, Germany, Thailand, whatever it is.
When people come here, do you feel the difference that they are newcomers or they are local people?
Yeah, I mean, the big thing is the network, right? I think when you come here, there are like a few mistakes that a lot of founders do. One of them is they basically focus on their community, and it's very easy. Like, for example, if you're Ukrainian, you're gonna mostly go into your community and stay in that community.
Yep.
And I think it kind of defeats a little bit of the purpose of you coming here. Like, the whole point is for you to broaden your community, broaden your connections, so you could actually gain the power of, for example, Silicon Valley, or whether it's going to be New York. Because that bubble kind of also keeps you down.
And what about the way, how do people approach you? Like the conversation, how do they start the conversation? What do they expect to hear from you? Can you hear that when from newcomers and see the difference?
Yeah, I mean, the other second thing that a lot of the immigrant founders have is they're not great at telling a story. And Silicon Valley specifically, I mean, I grew up here, so I can more relate to here. It's all about telling a beautiful story of what your idea could be and what the vision could lead to, not necessarily what you have now.
Yeah, definitely.
And for a lot of immigrants, it's very hard because they're kind of in the head, but this is what I have now. I have like 1,000 users, whatever.
Yeah.
But like bigger picture, more beautiful story. I mean, there is a little bit of fake it till you make it in the Valley, right?
Yeah. What are your three main investment criteria?
Well, number one, first generation immigrant founders.
First generation immigrant founders. Okay.
Yeah, that's criteria number one. Criteria number two would be like, is the idea that you're building big enough? Like, is the market, total addressable market, big enough? The other is, do we feel that this founder can actually build a big company? And there are multiple things in how we're looking at it. Those are kind of the top three criteria.
Okay. This feeling is actually the most interesting and tricky part, because it sounds so simple, but in effect, like how do you build this feeling about the founder? What do you pay attention?
So, look, we have investment committee. That's right. And so even if I have that feeling, doesn't mean that the rest of the team has.
Okay, let's talk about your feeling.
So my feeling, I meet with the founder, and let's say that I can relate to and understand the problem that he's solving. I believe that this founder has strong enough skills to actually make it happen. He can hire the right team and can convince people to actually follow him and to build this dream. And the idea is interesting enough. It doesn't mean that, there's no competitors, but like, is the market big enough for multiple competitors in the space? And this person can actually grab a big chunk of the market. And after that, so I have to draft up an internal investment note that has different grades. I'm not gonna disclose what they are, but there is like, I grade on level 1 through 5 on different attributes of the company and the founders. And then I basically submit that to.
Kind of checklist.
You have to actually fill in the note.
Okay.
So it's not just a checklist, but it's answering the questions, internal questions on the deal that we want to bring to the investment.
I think there are some documents you can find online in order to understand better how the VCs make the decisions.
But different people have different types of decision trees.
But it's very interesting to see from the other perspective, telling about yourself.
Sure.
When other person needs to pitch for you.
Yeah. So we basically then on investment committee, on the first time the deal is brought, the person who brought the deal presents the deal. It goes through the deck. We discuss it internally. There might be some questions that arise. Also, we have an analyst that might go and do some more like preliminary kind of diligence. Questions come up. We discuss the questions with the founder. Founder answers them. Let's say we want to move forward. We actually bring that founder to our committee. He presents to the whole team. People ask him questions. And then after that, each of us does another grading without knowing who answered what. So we basically put scores for different attributes. And then in the end, if the score is over X, we discuss with the whole team, like, okay, let's say the score is not, let's say 100%, it's, let's say, at 70%, why? Let's hypothetically say we have, so our investment team is 5 people, right? So, and there are basically 3 of us that are like the biggest, I guess, decision makers, and with everybody else, everybody has an equal kind of voice. But the idea, if one of the partners is a no or a maybe, is for us to figure out why and try to find enough data to turn them from either red, yellow to green. Then you utilize, for example, your analyst, or do your own diligence, or you do both internal, like your own diligence as well as to basically bring enough conviction to the people who did not give a green flag.
Oh, I have hundreds of questions in order to unpack that, but I just try to focus on what to the audience will be the most interesting. And I will ask you 2. The first one, what are your 3. What are your red flags? Like, no immediately if you hear this. And the second one, is it tough to pitch to your fund? Because what I learned here, like at Stanford, when the guys judging startups together with me, and these guys, the guys from Sand Hill Road, they say, we don't play with founders. It's like tough to pitch at Sand Hill Road. So that's why they really challenge startups, founders here during the educational process. Is it tough also to pitch to you? And what are your top 3 red flags?
You usually have 5 people on the call. Like, I'm not sure I can maybe know ahead of time what I'm going to ask. I don't know what any of them are going to ask. So, 5 people that can throw questions at you.
But do they try to challenge founder actually with a difficult question, whether like being rude or something,
No, nobody's being rude. They're asking questions, they expect you to answer it. And you have to be honest and truthful about the answers. One thing is, for example, one of the questions that you have asked is like, what are the red flags? Is if you don't know your numbers.
Okay.
Like, if I ask how many users and you're like, we're somewhere, blah, blah, blah. Like, you need to know the number. How many users you have, or what's the revenue per user, what's the cost of acquiring a user, and so on and so forth. All right. Or if it's enterprises, other questions, right?
Yeah.
But like, they're common questions that any VC will ask, but you have to know those numbers, and you cannot be saying, you could say, look, I don't know what their numbers are today. Let me get back to you. It's okay to do that.
But you could ask, tell me the numbers from the last month or quarter.
And that's fine.
Year.
Yeah. And that's fine if you tell me, but you're like, okay, let me get back to you on the latest numbers.
Okay, yeah.
Don't be afraid to say, I don't know.
Just don't tell the bullshit. Yeah.
Exactly.
But, yeah.
Like, I don't know is a normal answer. Let me get back to you.
It's better. It's better than knowing, yeah. But then telling.
I mean, sure.
The best
but there are going to be questions that you will not know answers to. Of
course. But
don't try to come up with the answer on the spot, because that could actually haunt you.
Mm-hmm. Or you should be super self-confident. Sometimes I thought that worked.
Yes, but that's the story part, right?
Yeah.
You need to be like that self-confidence of being, no, this is the right thing, and that's fine. If you're super confident, then sure, but the numbers, like, don't forget when they go into due diligence and the numbers don't add up, it's going to be automatic no.
Yeah. What else? What are you?
So confidence is like, if you're not confident, the people in front of you will feel it.
But you haven't been confident at your 22 or 23 age. And still you made it.
I made it, but I mean, we were surprised as well.
So you should try, even if you don't feel confident, but be prepared.
Yes. And I think also the reasons why you're doing is important. Why did you why did you decide to go into a business of selling virtual cows?
Yeah, like founder market fit.
Yeah. Mm-hmm. Like, why? Mm-hmm. Like, why this specific business interests you?
So you mentioned that not mission, but right now this question for me is kind of a mission related, Why do you do this is more important than what you do. Yes?
Correct. But so there's a company and a founder, right?
Yeah.
But I want to understand why the founder decided, out of all the different things that he could have done, do specifically this.
Mm-hmm.
The other thing that I've seen multiple times is founders do it for the wrong reasons. And the reasons is they go to some events and things like that. They see other founders and it sounds so sexy to be a founder. It's such a cool group of people that hang out and like parties and different things. What they don't realize, this is like they're 2% of the time. The rest of the time, it's like sweat, blood, and tears.
Yeah, you need to work.
So some people become founders because of this view that they see from the side of how cool it could be. Mm-hmm. And those are the wrong founders.
Okay. But, I like the idea that to promote the positive mindset of the happy, successful founder, you need to work, definitely. That's why you need to find something, the answer why. But I don't like the promoting of the picture of this depressed, unsuccessful founder, like with the red eyes. I'm not saying
it's depressed and unsuccessful, but like...
even when it's hard, for example, I've been through many different and not good parts, but you were motivated, like, okay, we have this challenge, let's move forward, but not like promoting this picture. Oh my God.
So let's hypothetically say you worked for Google or for Facebook or Microsoft for 15, 20 years. The whole, and I'm not saying there are now founders that came and built successful companies, but the mindset matters, right? Definitely. When you go in, you're so used to certain work ethic and certain comforts that you're not going to get as a founder in the beginning, at least.
Yeah.
And that mismatch sometimes happens. Mm-hmm. Like what's a reality and what's in your head of how you think it's going to be.
Mm-hmm. Mm-hmm. Especially after working for large corporations.
Yeah. So I never worked for a large corporation.
Yeah, but
I always worked for
a lot
startups.
of people here, and
so I never had the mindset of a big corporation.
Yeah. I know what do you mean. I'm not sure that people outside of the area may be familiar with that. There is a special term called golden cage.
Yes.
Yeah.
Yeah.
Then it's very bad idea to leave that kind of job,
Yeah.
even when you want to build something else. But it's definitely
There's
bad
another
idea.
thing. The other thing is, if you're making a decision to do a startup purely financially driven, it's a bad idea. Because a lot of companies fail. And you working at, let's say, Facebook and making, $500,000 to $1 million a year, you multiply it by the amount of years that it's going to take you to build a company. This is how much you're giving up.
Yeah.
So, and then you put in the risk factor into it of chances that you're not going to make it. Then you have to decide. It's like, being a founder has to be calling.
Has to become
A calling.
a calling.
Yeah.
What do you mean about?
Like from the inside, you're like, okay, I want to build something that a lot of people will use, and want to build, not because I want to make money. If you build a product that a lot of people will use or buy, it will lead to financial returns. But the first thing needs to happen is for you to figure out what the problem is and build a company that people want to buy from or use the product.
One more question is, how is it important to fundraise your first money? What does it mean for the team, for the project? Or you would prefer to bootstrap?
Look, if you can bootstrap, I would bootstrap as long as possible.
What are the advantages of raising money?
The advantages are that you can actually hire a team, you can potentially move faster, and get to market fit faster. But then you're also, it's kind of like you need to find that balance between the valuation and the money you're getting versus time, right? So if you can bootstrap and get to at least a sliver of market fit, that would be probably where I would say, okay, you should start going in fundraising. Or if you can get to like full traction, then it's a completely different story. There are multiple companies in the Valley that raise their seed round only and never raise money again.
Yeah, definitely. I just try to bring the idea. I found that raising first money from the professional investor means that your strategy is highly validated, or you as a person validated. And that's why sometimes I recommend, because people just don't like to raise money. They don't understand how this works, this partnership. And so they keep making their mistakes instead of go and pitch and get the feedback and pivot and do the right things in the right way. So what do you think about this idea of validation of the startup?
The cards are stacked definitely in the favor of investors because, for example, you want Google credits. Google is like, okay, who is the VC that backed you?
Yep.
You want a bank to
another.
You want a bank to give you a loan. They're like, who's the investors? What's the last valuation?
Yeah.
They don't want your validation. They want somebody else to validate it. So, and I think you should raise the money when you have a product ready. Because you're a seed investor. No, but in
at seed stage you definitely need to have, but
even pre-seed.
Even pre-seed.
But even if you're raising pre-seed, you need to, in my opinion, you have to have at least some product.
Okay.
That at least, and then some people that say, yes, this is something that we would be interested if you build it.
Okay.
If you're pre-seed. If you're a seed, we want you to have at least some traction. There's some people who are willing to sign a contract or buy the product or something like that. It's different if you're a deep tech versus non-deep tech. The longer you can wait, the better. but there are benefits with raising money, but it has to be institutional. It can. So there's a difference with raising pre-seed or seed from individuals on a safe and it's fine, or institutional investor, which would be venture capital.
Why is it important?
So all the benefits, banking, Google, relationship, Amazons, and things like that, are all available once you raise from a VC.
Yeah, and the networking of those VC and the strategies and the advising part.
But if it's too early, then there is no need in networking,
and
because
this
you're
is
still
the
building a
problem
product.
That very often founders take money from unprofessional investors and they don't give any additional value, and they don't think being early stage about the future, how important is it. And I know the stories when later professional VCs didn't want to jump into that cap table with unknown investors.
Yes, especially if those investors are mostly international.
And so when you will listen to the pitch of the founder that knows everything that we have just discussed, but he will not have the product, but he will have the deep understanding of the market, of the problem, and he will be just about to start building an MVP. Will you most likely invest or not?
So then we have to rely on his background.
Okay, background. So if he was an entrepreneur, not maybe
if he was entrepreneur, if he was working at another company that was in a field that, and the current company is in the field that he really understands and had experience in the past, or had the pain that he experienced before, and that's why he started this. Then yes, we would back somebody like that. Mm-hmm. But if you're a repeat founder, it's much easier, whether you made it or not.
Yeah.
Even if you failed, compared to other countries, the failures are actually celebrated in the US.
Mm-hmm. Mm-hmm. Can you name some founder that really impressed you, or two or three? And can you tell us some story? How did he approach you? How he impressed you? And why did you like him so much?
Oh. So we have a portfolio company. The company is called Helm AI. The founders of Vlad, and he is a PhD from Berkeley, did his postgrad at MIT. The company was, when we invested in it still is in the competitive space. They're in autonomous driving. And the reason when we started looking at them and digging deeper, first of all, his background in AI was exceptional. Like his whole background, computer vision, AI was amazing. Like you talk to him, he's a highly technical founder. The other thing when we were doing due diligence, because this would be on the deep tech side to some extent, even though it's AI computer vision, but it's still like autonomous driving. What we did, we looked at competitors, and one of the things I did, besides talking to some people from big corporations and other people, I looked at LinkedIn and looked at the people that he has hired and compared them to the people that were hired by his competitors. And the quality of people he was able to convince to work for him were just exceptional.
Yeah, it matches with the idea of raisable founder, not just capital, but people as well.
And I was like, okay, this guy can actually probably achieve what he is saying, because the people that he was able to convince to follow him are A people.
Yeah.
Because one of the things in hiring people, if you hire A people, those A people will hire A people. If you hire B people, most of the time they'll hire C people. And then if you hire C people, you usually hire D people. So having a high bar for quality of your team is important.
Mm-hmm. Very interesting. Very interesting. So my audience is mostly entrepreneurs from right now from outside the US that are thinking about reaching their full potential with building some tech startups with a global impact, thinking about coming to Silicon Valley, about the importance of building their network. Many of them are working on some idea, but not everyone. And so what would be your advice to those people at this stage?
To build idea or not to build an idea?
No, what to do next, because they are at that stage that we discussed at the beginning. And they think what to do next, how to actually reduce this period of mistakes and wasted money and making the things in the right way, how to hear the knowledge is everywhere, what to do, how to do it in the right way.
I think that if you're a founder, then I think getting out of your bubble, whatever the country you're in, and to some extent coming to this bubble and spending some time will probably open up your eyes, and it will basically give you an idea of what you want to do next.
Mm-hmm. How can you support them or inspire them to keep going?
I can talk to them and give them an advice or give them some feedback, but the ultimate decision has to be theirs.
Mm-hmm. Okay, cool. Thank you very much. You shared a lot of valuable insights. We would love to have you at some of our meetings with a group of entrepreneurs because your experience is really so wide, from the founder and investor and living all your life here in Silicon Valley. Yeah. And in the same time being in contact with people, with immigrant founders all your life. So you should definitely feel the mindset difference and what to be improved. Thank you.
Thank you. A pleasure.
Thank you.